Okay, welcome everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday, the 26th, which means I probably need to change my date here to the 26th. Glad that you could join me, and I'm just going to spend a quick 25 minutes. Am I on a cell phone? I'm actually on a cell phone headset. We got snow here last night. So we have some weather, which means I should turn my volume up all the way. Do I sound better now with the volume up all the way? If I do, please let me know, and let me go ahead and continue. Today, I'm going to talk about initial claims, a bottoming, and wire slash the numbers when it comes to dollar cost averaging, options or leaps. It will be a quick one today, so hopefully it'll be helpful for you guys, as well as showing you where I'm putting money to work right now. So, if we were to talk about initial claims, what should our market be doing right now? With today's initial claims, what should our market be doing right now? What do you think? Buy food. Should be tanking, right? There we go. Should be tanking because that's not what I want in there. Try that again. Should be tanking because, get that out of there. Because, plain and simple, beat the previous record in 1982 by more than quadruple. Right? The initial claims report started in 1967. Golly, I hate that I can't get this the way that I want it right out of the gates. New Times Roman, 18, bold. All right. And what's really scary is Ellen Zint. I need my glasses. I'm getting too old. I need my glasses to be able to read my own freaking notes right now. All right, Ella's Zentner from Morgan Stanley projected through her newly made model, which is funny that they have to make up their models right now, that we're looking at 17 million job losses, which should be twice as many as the 8.7 million in the Great Depression. So someone asked the other day why I think it's a V-shaped recovery. Does anyone here today believe we're going to go through a Great Depression? Are going to go through a Great Depression. So let's take a quick peek. There are 15 of you. I see 3 no's in a row. I see a question mark, and out of all people, it's probably going to be Lance, right? It depends on how bad the virus is. We don't know because this is a new virus. Well, so let me just make some comments. Right now, this is not as bad as the flu. It's more contagious than the flu, but it's not as bad as the flu. We just had 2 more no's that came in. Way to go, Jeff, and way to go, Mary. So the short answer is, can it be? Of course. Of course it can be. You know, duh. Anything can happen. It could get much worse. We get it. But the probabilities of it being much worse just aren't there. And you need to play the probabilities. So yes, it can get much worse, but most likely this is a 1 quarter, maybe 2 quarter blip. So that's the honest truth, right? It's nowhere close to the numbers of a bad flu season worldwide. I'll be honest with you, I personally am kind of shocked that we are in the position that we are in right now in regards to the coronavirus. It doesn't all add up. It just doesn't. To say it simple, it doesn't all add up. But you play the hand that you're dealt, right? And this is the hand that we're dealt, which leads me to just making a prediction. I predict we sell off like we did yesterday and are up less than 1%. I'll go to another coronavirus. How many new cases will we have from Friday after the market closes to Monday when it opens up? Shoot me some numbers. Shoot me some numbers on what do you think? I think it's going to be pretty, well, it's going faster than I thought it would go, is what I'm going to tell you. But shoot me some numbers. What do you guys think? Worldwide, we're at $4.99. I don't care if you do it worldwide. I'm primarily caring more about the United States. Oh, we're just 9 cases away from overtaking Italy. Where are we going to be? How many more cases are we going to have Friday at 2 o'clock when the market closes Mountain Standard Time to Monday morning? Because this is your predictions. These are your understandings. We've been to 11, 12, 14,000 the last 2 or 3 days. All right, we get someone bold. 250,000, Lee? Do you think we'll be up that high? We're going to gain another 150,000 cases? So I'm kind of doing today's math and tomorrow's math. We could probably be at 100,000 by Friday, right? And if we're at 100,000 on Friday, if we're at 100,000 on Friday, right? Friday, Saturday, Sunday, between 10 to 15,000. If you were to ask me, in 4 days, I'm going to tell you we will gain somewhere between 30 to 45K and be at 150,000 by Monday. The reason why I'm thinking about that is, are you guys ready to take off protection? I'm ready to cash some protection in, right? I'm cashing some in and adding bear puts, which is kind of important because it looks like businesses are going to have a 45-day, I touched my screen with my hand, 45-day reprieve from having to give earnings and guidance. So it's kind of funny, I guess. I don't even know how far out to go to cover a company / stock for earnings. So I'm kind of looking at things in 4-week gaps. We're going to trade the next 3 to 4 months in 4-week gaps. Now, here's a question. Are we bottoming? Give me your thoughts. Are we bottoming? Does this look like what a bottom should be? Give me your thoughts. All right. You know what? You guys type in just a trial bottom, more to come. So definitely. I mean, bottoming is a process. And if you were to ask me, we are bottoming. This is a bottom. This is a bottom. We now have a reference point right down here. You can use that 2200. We came back to test this. We have higher highs, we have higher lows, which means if we are truly bottoming, right? If we are truly bottoming, we will most likely have to come back and test that 2200. So yes, the bottoming process has started, which means we will most likely come back and test the 2200 range on the S&P 500. Someone asked me and said, go look at 2008, 2009. So let's do that. That's really a pretty good idea. Wow, check out that bottoming process. Couple bottoms there. It almost looked like it tested it 4 times. We got a double bottom here. We've got a triple bottom right here. Of course, that's Apple, so let's be smart. It should say the SPX. Let me go one more time. Sorry, guys. Helps if I have the information. Wow. So actually, there's a V-shaped recovery in 2008. Very interesting. People want to look at a V-shaped recovery. There it is. In all honesty, if you take a peek, right? Jagged, up and down, up and down, up and down, up and down. Got all kinds of steps through this. But that is a V-shaped recovery. And in all honesty, there's your cup, there's your handle, and off you go for more. Very interesting. I did not expect to see that. Here's where we tested the lows in 2009 again. And then we really took off. So interesting. This is a longer recovery than I expected. But yes, if you want to see what a V-shaped recovery is, although notice it only goes up 50% there from the highs. We only make up 50% back in 2008 or 9, it looks like right there. But interesting, very interesting to take a check and to look at what's reasonable and what can be expected. So, if you ask me for bottoming, yes. I'm just going to warn you guys up front. To warn you, you will hear the term slingshot mentioned more and more in advertisements and the media. So slingshot, that we're going to slingshot back up to our highs. Now, it's kind of funny. I giggle at this because the media and education has to push a slingshot, has to push a quick recovery, has to push the just hold on. It's okay to not make anything on the way down, which is obviously bullcrap, right? It's not okay to not make something on the way down. If you're actively managing your portfolio, if you're actively in the market, you sure as hell should make something on the way down. Anything you make up on the way down is profit when things come back up. There's no education that really tells you to sit back and do nothing. That's a waste of money if that's what your education is telling you. Your education is how can I best make up something on the way down, and how can I use, right? How can I best make up some of the downward movement, and how do I put it back to work? So, obviously, that is awesome spelling right there when you get a little sidetracked in your thoughts. Obviously, to add new positions is ideal if you are sitting on a ton of cash. For those who have had positions and now have some good cash due to protection, dollar cost averaging is a benefit. And I'm pretty sure most of you know how to dollar cost average, but let's go through it anyway just to make certain you get it. I'm going to use a stock example to start off with. Stock purchased at $100 and falls to 50. $100 and falls to 50 is down 50%. So we buy a second share at $50, and our new cost basis is what? What's our new cost basis if we buy one share at 100 and one share at 50? Right. You just add them together. 100 plus 50 is 150 divided by 2. Our new cost basis is 75, which means when the stock gains half of what it was, you are breaking even. And if it gains all of it back, you are up 50%. If you have two shares, it gets back up to $75. You're now at a break even. If it goes up to 100, you're now at 50%, which is actually, it's a 33% return. Sorry. Does this work with options? Hell yes. If you bought the right to buy Boeing at $350 January 21 and paid $38 for that right, you can now buy the same call for $4. $4 plus 38 equals 42. Divided by 2, because you have two contracts, equals a $21 per contract cost basis. Now, Boeing might not get to 350 this year. And currently, the delta for a 350 January 21 is 14 cents. H strike price is higher. It is 0.29. So let's do some math, right? $5 strike prices. If Boeing moves $40, the options will gain, and this was at 161 yesterday. So if Boeing gets to 200, The options will gain $1.40 times 4. The options will gain what, $5.60 or more because they go higher, right? And that's at the $200 mark. If they gain another $50, moving to $2.50, now we're talking about 28 cents, right? So for every $10, you're going to get 28 cents. If I do my math there, 2.8 times 5 is $14. $14. Let's add it all up. Currently, they're worth 4. They gain 4. They gain another 14. All of a sudden, if I do my math correctly, I'm at $22 per contract on the low side, which means Boeing no longer has to get to 350. At 250, we should be profitable because remember, every time we go up a strike price, the delta increases. I'm keeping this delta for 8 strike prices, $40 at 14 cents. I'm taking this one that's at 29 cents at 200. I'm taking that one. It actually was 28 cents is what I was calculating it at. Excuse me. I'm keeping that at 28 cents, but when it goes to higher deltas, it's probably somewhere around 235. The LEAP Boeing January 21st 350s will be profitable. So the question I always get, right? So the question is, why the hell don't we buy 2, 3, actually you already did buy 2, right? 3, 4, or 5 times the amount of contracts? So someone answer that for me. Why would we not buy 2, 3, 4, 5 times the amount of contracts when they're down this low? Why would you limit yourself if you start off with 4 contracts, not going any higher than 10? Which is my unwritten rule, right? If I started you off at 10, we're usually not going to go more than 20 unless it's something cheap like Ford. In all honesty, if it's pennies, I'm dollar costing the crap out of Ford. We're going to be back up at 50, 60, 80 contracts like last year. There you go, just in case it doesn't go up. So you don't throw good money at bad is the best way to say it. And that's the process. That is the process behind what we're doing. Well, Kevin, by the way, you suck at protecting leaps. Yes, I tried the protection on the leaps in the past. I've even tried it in 2008. Guess what? I suck at protecting leaps. What I have found, in all honesty, is that when you start to put and double your cost basis on a put, and you got caught from behind, and now you're doubling your cost basis without doubling up your share count, you've made it twice or 4 times as worse, is what it really comes down to. It's exponential. So that's why I used the spies. I used the SPY bear puts and worked it on the way down. I made up some of what we've lost on leaps using those SPY bear puts. We've taken 3 off for a profit. We're behind the 8 ball on 1 right now. But I think we'll get there Monday or Tuesday when we see 150 cases and the market craps its drawers. If this is a true bottoming, we're not going to be up 3, 4, 5% today. We're going to sell it all off the last 15, 20 minutes. We'll be up maybe 1%, probably less. If we are up less than 1% or less, that's a true bottoming. If we're way up high, 5, 6, 7% today, we're going to get our butts handed to us and we're going to test those lows much quicker than you'd expect. So I'm being judicious. I've done some dollar cost averaging on Boeing. We've done it on Ford. We have not done it yet on adding or putting positions in for Visa, for Disney, for Apple. Baidu we have done some dollar cost averaging on only because China seems to have overcome. They are on the downside of their coronavirus. I mean, they're up 67. True, you might not really be able to trust that, but they do seem to be on the downside of where they're at. So, hey, look, the USA just took over in this last 30 minutes. The number 2 spot, we are ahead of Italy, but our death rate is literally 6.5 times less than Italy. So our death rate's 6.5 times less. Guys, start nibbling. You don't necessarily need to find new positions, but you can choose. You don't have to dollar cost average your current position. If you don't want to be profitable and you want to put them into a new position at a lower strike price, you can do that. I personally don't like to lose money. Anytime I lose money, I'm pissed off, I'm frustrated. So I don't like to lose money. I'm dollar cost averaging. I will get out of probably half of them at a break even and let half go for my profit down the road. And this is a great example of understanding the thought process behind dollar cost averaging options and not throwing all your money into it. Guys, have a wonderful day. Hopefully we'll see a muted or a flat day tomorrow. We'll probably have a pretty big down day on Monday. It'll come 100% from the coronaviruses, and we see how many more record-breaking initial claims we're going to get. Then we might have a couple questions here. Nope, just some thanks. Guys, have a wonderful weekend. Be safe. I'll get this posted immediately for you to look at and work some of these numbers again. And congratulations on surviving the next generational crisis we're up against, the coronavirus, and a pretty good correction in our market. My pleasure to be with you today. Guys, take care, and I'll have this posted as quickly as possible. Until Monday, be safe.